Hello traders, Gary Wagner here. Approximately 11:12 in Honolulu, 5:12 in New York on Tuesday, 26th day of April 2022, and this is the daily report for gold and silver. Gold, palladium, and platinum recovered today, with silver being the only precious metal traded on the futures exchange to experience a price decline. Gold futures basis, the most active June contract, is currently trading higher to the tune of $10.40, or a little over 0.5%, and currently fixed at $1,906.40. Concurrently, we have dollar strength continuing to provide fairly strong headwinds against the precious metal, with the dollar gaining almost 0.6% and closed on the highs today at 102.35. Palladium futures recovered slightly, up 2.68% at $2,179. Platinum up about $7.70 at $912.70. And lastly, silver declined by about 0.5%, 12 cents, taking the most active futures contract to $23.55. The best way to characterize trading in gold today is an inside trading day in which we have a lower high and a higher low. In terms of a Japanese candlestick pattern, it is known as a bullish harami. It is a little bit more specific in terms of identification than an inside trading day because the candlesticks themselves create real bodies, in other words, a rectangle drawn between the open and closing price, and fill them in with different colors if the market closes below its open or above its open. In the case of this pattern, the definition is after a defined downtrend. We can make a clear case for that. You have a fairly strong red candle, meaning a final down day, and then the actual market opens within the real body of the prior red candle and closes within that, and typically we look for that to occur around the midpoint of yesterday's candlestick. So we certainly have that. It wouldn't create a signal to enter the market from this long side unless we had confirmation. Confirmation would occur if tomorrow's candle is a long green candlestick, meaning it closes above its open, and you get a higher low than the previous day, and you look to get a higher high, not only of today's action, but somewhere close to the open of yesterday's candlestick. The fact that gold could recover after trading below $1,900 yesterday is evident in this 240-minute or 4-hour candlestick chart. We can see that the lows that occurred towards the beginning of the 25th. However, we had a slight recovery, not only in New York as it flirted back and forth between 1900 and then below, but we had our low for the day occur just briefly before the open in New York. That was 1896, followed by an open and close, or a doji candle, that were one tick apart, and then a final spurt during the last couple hours in trading. When we convert our short-term 240-minute candlestick chart into a Japanese average chart, or Henkanashi, we can see that the sell-off really began to accelerate in terms of strength towards the beginning of yesterday, and then began to level out, really forming a series of consolidation candles or doji-like candles, even in a Henkanashi, which shows us that we haven't seen a strong uptick or a return to a rally mode. We could see a further decline. However, this does allude at the potential of consolidation, which definitely occurs prior to the conclusion of a correction and comes just preceding the beginning of a rally. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.